Hey. Yo. Yo. Alright. Shit. Uh, Alright. This vid I'll be teaching y'all about fair value gaps and inversion fair value gaps. So what a fair value gap is to begin with is a 3 candle sequence that looks like this. Usually I'm just gonna mark one out. So to mark this out, what I looked for was the wick of this candle, and this is the first candle right here. We use the wick, the top wick, and then there's a second candle that's kind of just in the middle, and then there's the third candle where we use the bottom wick, and this is referred to as a bullish fair value gap. Fair value gaps are usually like areas market likes to retrace into, tap, and then bounce out, or yeah, just stuff like that. Like if you mark one, I'm looking for a bullish fair value gap here. Let's look at this one, draw this out. You can see that the market played up or went up a little bit, comes down, retraces, because market is always going to have some type of retracement pattern. Retraces, bounces out of this fair value gap, and continues. So now we're going to look for a bearish fair value gap. So it's still going to be a 3 candle sequence. And let's just mark out this one right here. I just seen it first. So we have this candle, but we're going to be using the bottom wick first. The bottom wick. The second candle is right here. And then this one actually doesn't have a top wick, but you still see that gap, keyword gap. So this is still considered a fair value gap, because if you can basically like make a box like this and clearly identify a gap, then it's a fair value gap. Let's find one that price bounces off of. Let's see. Let's go find one. So, bam, right here. Unfortunately, this one also does not have a wick on the top of this, but here we start 1 candle. We see the bottom wick. You can definitely see this open space right here, making or knowing that's a gap. So mark this. We find there's a second candle, and then we're looking for the top wick of the third candle, but if there's none, then you just kind of put it at the body and then mark it out. You can drag it across however far you want, doesn't matter. And you know, price was coming down, came up, bam, we're respecting this gap. You can tell it's being respected by seeing wicks like fail to, the candle failing to run through it. Wicks poking above is a good sign. This right here, it's still being respected because this candle didn't close outside of this box. Let's say this black candle, because like I told y'all, a bullish candle is an open down here, trades lower, trades higher, puts in the top wick, and then closes right here. So this is where this candle closed, meaning it closed inside of this gap. Now, if it closed outside of this gap, that's a bad sign. We would not want to see that if we're looking for like a short play or something, meaning we're betting on the market going down. I'm just going to put a tool up here. Sorry if I'm overwhelming you. You can replay this. But let's say I was looking to go short somewhere, right? And I see that price is respecting this box. Bam, I go short. Short meaning you can bet on the market going up and down and make money both directions. Let's just say I'm going short. I put my take profit. Yep, just leave it right here. And bam, it's respecting. It respected right here. And now it's trading down. And then bam, ran through the TP. So that would have been a dub. That's not how I trade. I'm just throwing a random example up there, showing how price can respect a box and, move to TP, move on. Now on to an inversion fair value gap. First off, these are short acronyms for both of these: fair value gap and inversion fair value gap. IFVG, meaning I for inversion. This is a trade right here that I did actually take, and I'll just explain it briefly. So last video I explained what a liquidity sweep was. So you should have that down. If you don't, go rewatch it a few times. So this play, basically, I waited for a market to do a liquidity sweep into a fair value gap, a bearish fair value gap. Here's that 3 candle sequence. Right here. One, use the bottom, open space, and then bam, the top wick of the third one. This is on the 15-minute time frame though. You always want to try and align price with your time frames. I'll get into that in another video. Then yep, we did a liquidity sweep, respected a 15-minute fair value gap, and then I looked for an inversion fair value gap, meaning, let's say I was looking for a buy play, right? I wanted to go up. If you wanted it to go up, you would want it to respect this one, right? When it doesn't and closes below like this, you can anticipate that we run for something lower, like a low down here, down here, down here. So that's basically what I did. I didn't want a buy play. I wanted a short play. So that's what I waited for. We disrespected the buy zone. And as soon as we did that, I entered short. And then bam, we actually instantly go to my TP. So that was that play for the day. That's all for this video though. If you need to rewatch it a few times, that's fine. It definitely can be overwhelming. But yeah, that's all for this.